I want to start on what all investors are so interested in is the fact that you are eyeing the public markets. We're hearing as soon as Q1. How much more T's crossing, I's dotting you having to be doing at the moment?
I've heard that rumor as well.
Is it correct?
Well, you know, it's an interesting rumor. But I think for us, it's always been like really critical. We wanted to establish ourselves as a global business. That meant success in the US, meant both in awareness and in profitability. And now with almost 40 million users in the US and it being a profitable and actually our largest market by revenue, those kind of criteria has been met. So we're definitely ready.
You've been doing interesting partnerships with Uber. You've been launching a waitlist for a credit card. We'll get into those products in a moment. But when you say it's an interesting rumor, could you go earlier than Q1?
Everything's possible.
Okay. Ed.
Sebastian, good morning to you. Let's think about then where you might list in the context of your business. You've grown 32% in this country over the last year. Why is that? Why are you seeing strength in the US market?
Well, I think that what's interesting, actually, it comes back to an interesting McKinsey study from 2015, and it showed that in this market, there is a growing number of consumers that are very tired of the credit cards and how credit cards work. There's a great Netflix documentary called Credit Cards Explained. You will see all the bad practices that banks have accumulated over the years to push people into debt, to revolve, to build up as big balances as possible. And these group is self-aware avoiders, people that are looking for simple credit products, zero interest, fixed installment. They're about 20% of the US population. And Buy Now, Pay Later speaks directly to this audience. And I think that is the most important explanation for the success in the US.
Sebastian, later in the program, we're going to talk a lot about Alibaba's earnings. And I know that China's not something that's top of mind for you, but bear with me. They talked about the consumer in China having a lot of cash, a lot of savings, but sentimentally, they're not prepared to spend. It's a really psychological market. Now, compare and contrast that with the United States. A lot of people I hear from are talking about credit card use and credit card levels, but psychologically, the US consumer seems prepared to spend. What do you make of all that? What do you see through your platform?
Exactly that, right? I was actually a little bit worried around Christmas when I saw the Christmas sales. I felt that Christmas sales this year was a little bit discount driven, and I wasn't clear to how much was merchants kind of trying to offload stock through discount and how much was consumer strength, so to speak. But I think now, with a few more months in the bag, you see that like consumer spending in the US is holding up quite well, and there is that demand. So we're seeing that across all categories that we cover. And as much as we're associated with kind of fashion and so forth, like with being live with Uber, with Airbnb, with a lot of other big American brands, we can see that across the board.
What's so interesting is you have been building up a focus here in the US and you have got this wait list for a credit card, but you're meant to be the anti-credit card company, I thought. This whole idea that there's spiraling debt that mounts there. How are you doing it differently? Why do that differently?
Well, I think that like the interesting thing is that to me, the card is just a delivery mechanism. It allows our consumers to use Klarna everywhere as opposed to only the places where merchants have integrated us. And even if we cover 40 of the top 100 US retailers online today, we still want to make it available everywhere, right? But I think the key difference versus the credit card is how you use it. Now, when I used to work at Burger King back in the days, when you would swipe a card, you would press 1 for debit and 2 for credit.
Yeah.
Because it made a lot of sense that you didn't use credit for every purchase. But the banks abandoned that because they wanted you to build up your monthly statement to be as big as possible, to put everything on it so it increases the likelihood of you lending and borrowing money and kind of increasing the revolving, right? Like you have to remember a credit card balance is usually $5,500 on average. With Klarna, it's $150. So to us, the ability to always have the option between debit and credit is fundamental. That's one of the key things that will provide a healthier, responsible usage of credit. And in addition to that, having zero interest and fixed installments. So those are the primary concepts. And we can bring them through a card. We can bring them through offering them directly on the merchant website or in the store.
At its heart, you're doing things differently by being tech-driven. A lot of credit card companies are now pretty tech-driven as well. I want to focus in on the generative AI side because you caught a lot of headlines by the fact that you said, look, now generative AI within our customer services is doing the job of 700 people. Is it still 700? Is it more than that?
It's probably slightly more by now. I think the reason we knew that number would kind of catch the attention, but it's partially because I feel there's a lot of buzz around AI, and there is a lot of things, demos being announced, and you were talking about Google today announcing something. But there are a few things that are practically there, and a lot of business leaders are asking themselves, like, what is the actual implications on my business? And this was the first time we at least felt like, look, here's a practical application that isn't like just a small, it's real life. Consumers prefer it because it's actually higher customer satisfaction than the human agent. It's faster to use, it's higher quality, and it's having profound impact. But we also believe that society and politicians needs to recognize that this is not something that's going to change in 10 years. The implications for society are going to come in the coming years, and it's time to think a little bit proactively about what measures could be taken as a consequence.
Sebastian, exactly 1 month ago, we had the European Commissioner for Financial Services, McGuinness, visit us here in San Francisco, and we talked about fintech regulation, essentially. You operate in both markets. Which do you find to be more friendly of the regulators between the United States and Europe?
Well, I think amazingly the EU introduced some legislation back in 2004-05 that meant that we, who are a fully regulated bank in Sweden, can passport that license across all European states. And that is a tremendous advantage. And to some degree, it's actually easier even to operate across all of the US states, where there's bigger differences on consumer credit lending in different US states than there is among the European nations to some degree. So it's actually, I would say, fairly even a little bit sometimes advantageous to be in Europe. But we definitely think that there is more competition, openness, and willingness to promote competition in the American society than in the European Union. And so I think that's very favorable in the in American context.
Sebastian, when you do go public, investors will be very focused on profit. Could you speak a little bit about your profit?
Of course. No, I think, look, from my perspective, I hope we will be able to deliver some very interesting perspectives when we are ready for that, because we are seeing a very strong growth currently within Klarna. We are definitely above $2 billion of revenue. We're seeing very high volume growth. At the same point of time, due to the implications of AI, since September, October, we have stopped recruitment. And in our case, with normal attrition rates that most tech companies have, where people stay about 5 years, this means that we are actually shrinking in number of employees by about 20% per year. So we hope that by the time we kind of get to that perspective, we're going to be able to present something that looks like revenue growth while costs actually diminishing at the same point of time.